Hey, this is Warren Redlick. Really exciting Q1 2022 update from Tesla. The biggest news we're going to get to early is earnings. Earnings were big. If you're a short to medium term investor, that matters a lot. If you're looking out to the long term, it matters still. Let's talk about it. Are you ready? Let's go. Here we have the slide deck, the shareholder deck, and some interesting details. First quarter of 2022 was another record quarter for Tesla by several measures such as revenues, vehicle deliveries, and an operating margin of over 19%. This is big. Operating margin means they're making a lot of profit on the revenue that they're generating. You have a lot of revenue, but you're not making profit. Your margins are low. Having an operating margin of over 19% is high. I just did a video, napkin math, where I talked about if Tesla gets to 3.6 trillion in revenue, and I came up with a net profit number of like 600 billion. And that's pretty much around 19%. So it's that the idea that their net profit would be that much a share of their revenue would have seemed crazy. I kind of felt off when I said that in my video, and it seems like they're already there, and I think margins are growing. Outstanding debt has fallen below $0.1 billion, below $100 million at the end of Q1. They basically have zero debt. This is monster. There are competing car companies that are out there that have tens of billions, even more than $100 billion in debt. Tesla's basically zero. Expanding production capacity, great news. That had a negligible impact on gross profit. Putting significant efforts into in-house cell production, raw material procurement, and supplier diversification. We knew all that. Challenges around supply chain have remained persistent, and our team has been navigating through all that. They're doing a great job. Inflationary impact on our cost structure has contributed to adjustments in product pricing. One of the things that we saw is that the profits were up, even though the prices of the products they sold were really from before the price increases. So that kind of cuts both ways. Probably the cost increases have been pushed off a bit too. So because they have long-term contracts, so the cost increases they're seeing are probably going to hit later as well. But there's a lot of good news here. And we got operating cash flow less capex of $2.2 billion in Q1, total debt under $0.1 billion, $3.6 billion in GAAP operating income, $3.3 billion in GAAP net income, $3.7 billion in non-GAAP net income. This is monster. This is going to lead to that earnings per share number we're going to get to a little bit shortly. So automotive revenues, total revenue was up $18.7 billion, up from $7. The deliveries was about the same number. The solar energy storage, in terms of quantity of, say, megawatt hours, kilowatt hours, whatever, those numbers were flat or down, but revenue was up because pricing was up. There's a shift towards Model Y. There's a shift toward Model S and X, which is all a shift away from Model 3. I think there was a shift towards European revenue from the China factory instead of China revenue from the China factory, and that increases revenue. And you can see the gross margin is nearly 30% now. This is a consistent growth. It was 21% in Q1 2021. It's up to 29%. Tesla is getting more and more profitable. The revenues are growing and the profits are growing faster. This is crazy because revenue is growing fast. Operating expenses were $1.857 billion. This is actually less than Rivian. Rivian is spending more money making almost no cars than Tesla is spending making 300,000 cars. Just crazy. Just absolutely crazy. And then you get to earnings per share attributable to common shareholders, $3.22. This is significantly more. Wall Street was predicting $2.22 or $2.27. This is a massive beat. Tesla's profitability is huge. This is a big number, and this is probably the biggest number short term with the company. Is if they're going to have profit. You see the profit increase in Q1 2021. It was 93 cents, and now it's up to 322. That's more than triple. The growth year on year is more than triple. And you see 93 cents, $1.45, $1.86, 254, 322. I think you can guess that Q2 2022 is going to be more than $3.22. So when we're looking to the end of 2022 to Q4, during the call, Elon said that they were aiming to deliver 1.5 million vehicles. Well, they delivered about 300,000 vehicles in Q1. if they're gonna and they said that there's been holdups in Q2, so maybe they'll get to 650,000 for the first half of the year, and that means they gotta hit 850,000 for the second half of the year. So I think there's a good chance they're aiming for 500,000 vehicles delivered in Q4. And then you look at profitability, if gross margin continues to rise and they're gonna deliver 500,000 vehicles, and the Megapack factory is now coming online, and they're gonna deliver a substantial number of Megapacks out of the new Megapack factory in California, I think you're looking by the end of the year, Q4, which we'll find out in January of 2023, we're probably looking at more than 5 and maybe $6 a share in Q4 of 2022, which leads to ballpark leads to probably more than $15 a share for the year 2022. But what's really exciting when you're looking at earnings, I don't get that excited about quarterly earnings, but if you're going to focus on quarterly earnings and you look out to 2023 and you say, well, if we're going to start at $6 for the quarter, for the first quarter, let's say, we might get to $10 for the fourth quarter, and we might be looking at $30 earnings per share for the year. And it might be more than that. If you get to $30 earnings per share and you say, look at Tesla's growth rate, you say Tesla deserves a very fast growth. They deserve a price earnings ratio of 100. With a 100's price earnings ratio and earnings of $30, you're talking about a $3,000 share price at the end of 2023. And that's, to me, pessimistic because we may see faster growth. Really, when you're pricing in this growth and you see more and more growth, and then you've got FSD coming online and increasing profitability, and you're starting to look at a future with robotaxi network and bot, you could see share price going crazy by the end of 2023. And now you're looking at the share price today and you're saying, wait a minute, I'm paying $1,000 for a stock that's going to be worth $3,000 at the end of next year. I'd pay a lot more than $1,000 for something that's going to be worth $3,000 at the end of next year. And I think it could very well hit $5,000 at the end of the next year. If we see the FSD going to wide release, we see the robotaxi network start operating in 2023, even in a limited way, that really drives the story about profitability going through the roof. There's a lot of potential here. And then you add in, Elon talked about, there's this question about where's Tesla going to spend this big cash pile that it's growing. And Elon talked about how they're targeting mass production of the future robotaxi vehicle, no steering wheel, no pedals, highly efficient and highly efficient cost per mile of operation. We're looking at that vehicle in mass production in 2024. That means in 2023 we're going to see factories being built. And I think we're going to see several factories being built. I think they're learning from Berlin and Austin. They're going to apply those learnings, hate that language, but they're going to apply those learnings to the next generation factories that Elon talked about with Sandy Munro a while ago. We're going to see an even more efficient set of factories, probably smaller footprint, probably more efficient use of space and higher velocity of manufacturing, even simpler manufacturing model for a highly efficient vehicle. That's where Giga Osaka comes in. And there's probably another gigafactory in Europe, and there's probably another gigafactory in China, and there's more gigafactories in the United States, and it's all coming together. You're going to see even higher volume. I think we may be seeing Tesla Tulsa as one possibility, Giga Osaka. There's a lot of stuff happening here. Tesla gets more efficient in building factories. Their capital efficiency gets better and better and better, so they're able to build more factories, produce more vehicles, produce more profit with less investment. And all of this screams the stock is worth a lot more than what Wall Street is paying right now. So total revenue grew 81% year on year. Growth in vehicle deliveries, increased average selling price, growth in other parts of the business. They had such a huge cash flow that they paid down $2 billion in debt, and they ended up with more cash than they had when they started the quarter. It's just crazy. And now they don't have any debt left to pay off. So they're just doing really well. Model S and X production is growing. I think we're going to see Model S and X production and deliveries increase, and that's going to be a somewhat of a boost. We're going to see a shift more to Model Y, which is a higher value vehicle than Model 3. That's going to increase price. Manufacturing cost of Model Y in Giga Texas and Giga Berlin is going to be less than the manufacturing cost in Fremont, and maybe less than the manufacturing cost in Shanghai. And that's going to increase margins even further. So we're just seeing more and more good news for Tesla. Didn't really change vehicle capacity numbers, but Berlin and Texas are in their early ramp, so that's good news. We're seeing updates in FSD beta, 7 software updates in 2022. What's that out of, say, 3.5 months? Is that every 2 weeks? Elon said every 2 weeks. I think it's taken longer than every 2 weeks. We're aiming to release FSD beta to all FSD customers before the end of this year. Initial release of FSD beta to some customers in Canada started in March of 2022. More vehicle software updates. Diversification of battery chemistry is going on. Half of all Tesla vehicles produced in Q1 were equipped with a lithium iron phosphate battery containing no nickel or cobalt. LFP batteries are used in most of our standard range vehicle products as well as commercial energy storage applications. That's good news. Energy storage deployments increased by 90% year on year to Q1 with 846 megawatt hours, mainly by strong Powerwall deployments, but we're in the process of ramping production at a dedicated Megapack factory to address the growing demand. That's a 40 gigawatt hour Megapack factory. So we're going to see significant deliveries of Megapack by the end of the year. That's going to boost revenue, and Megapack is ultimately going to be a high margin product. Cost of the batteries that go in Megapack are far lower. That's the largest cost component of the product. It's far lower than the price that they're selling Megapack for. They're selling Megapack for over $1 million a piece, and the cost of the batteries is like $150,000. Those lithium iron phosphate batteries that are going Megapacks, you're just going to see huge margins there. There's a couple of interesting photos here. So Model 3 body structure, you can see the difference between the way Model 3 is made and the way Model Y is made. Model 3 doesn't have front and rear castings, so there's 171 pieces of metal that go into the front and the rear. And Giga Texas and Giga Berlin are making that with 2 pieces of metal. That removes 1,600 welds, more than 1,600 welds. Sandy Monroe talked about this tremendous simplicity of manufacturing. Makes it a lot easier to make a car, makes it easier to make a car faster. A lot of the numbers look good. You just see this, what looks like exponential growth curves on a lot of these spots. There's this day after Super Bowl graphic in the middle here, the day after Super Bowl. You can see that the Super Bowl advertising, a lot of car companies spent a lot of money advertising their electric vehicles on the Super Bowl, and Tesla didn't spend any money on advertising, and Tesla got a huge surge in orders the day after the Super Bowl. Other companies are advertising for their EVs, and it's driving Tesla sales. It's crazy, but it's true. I think the big takeaways from Q1 earnings was number one, just on the type of numbers that Wall Street supposedly is interested in, we saw a significant increase in earnings per share. Wall Street was predicting $2.27 a share. You saw $3.22 a share, a massive beat. You would think Wall Street would react to that by saying, gee, they're making more profits than we thought. We should increase our valuation of Tesla and the stock price should go up. Wall Street doesn't work that way. It makes no sense. The stock price went up a little. It's bizarre. The stock went up early on the day and it ended up only up about 2%. Like what do they have to do to persuade you that the stock is worth more? If they demonstrate massively higher earnings than what you expected, why wouldn't you rate the stock as a much higher value and buy more stock? I tend not to worry about these short-term movements in the stock price. It's pretty obvious that Tesla's doing really well. The numbers are great. Tesla's going to continue to grow. So we're looking forward, and I just did my napkin math model on batteries. You can check that out here. The napkin math model, you look at batteries, you look at what Tesla is doing, and you're seeing massive growth. And you're seeing exactly what I talked about, that it's growing. They're using more batteries. They're producing more products with those batteries. And the revenue is going up and the margins are going up. And that's going to lead, as you go on forward to 2030, you're going to see much larger revenue, much larger profits, and a much larger share price should follow if at some point Wall Street catches up. That doesn't take into account Robotaxi network or Tesla bot. It doesn't really take into account the potential for FSD revenue to increase dramatically and thus really increase margins on the stock. Margins on the company. If margins are increased, then the stock value should go up as well. You put all that together and you say, well, I think we're being really conservative here. Another moment, Elon's mentioning the Robotaxi. That was a big moment. It sounds like we're going to see Cybertruck, Tesla Semi, and Roadster next year. I'm going to make a video about why I think they shouldn't make Roadster, but it's going to be tongue-in-cheek. They're going to make Roadster whether I like it or not. And the truth is, I'll probably like when they make Roadster. Another moment was late in the call. It's around 59 minutes in the call. There was an analyst question, and Drew Baglino said something about 15 to 20 terawatt hours in 2030. Now, Tesla's been talking about 3 terawatt hours in 2030, and I've been saying 3 terawatt hours of Tesla battery production plus 3 terawatt hours of supplier battery production. Tesla had talked at Battery Day, Drew and Elon talked about the world getting to 20 terawatt hours of battery production in 2030. So there's a question there. Was Drew talking about global battery production, or was Drew talking about Tesla alone getting to 15 or 20 terawatt hours by 2030? I think, be conservative, he was talking about global production and use of battery cells, but it's possible that Tesla's decided, you know what, the world just isn't moving the way it needs to. We're going to have to accelerate. This is master plan part 3. Tesla's going to dive into mining and increase mining of lithium in particular. That was part of the call, was the concern about getting enough lithium, and they're on top of it and they're going to make it happen. Probably need more nickel. There's ample supply of iron, so to make lithium iron phosphate batteries, that shouldn't be a challenge. There should be a lot of that out there. But if you take my model where I say Tesla's going to make 3 terawatt hours of batteries and use 3 terawatt hours from other suppliers, you say maybe Tesla's really shooting for 15 or 20 terawatt hours, then my battery revenue model is incredibly conservative and the value is much, much higher. Now, if we go into a dedicated robotaxi, the robotaxi network goes live. Elon was talking about pricing robotaxi, less than a subway ride. You can't get there until you have enough robotaxis to satisfy the demand you create. By making a lower cost ride. You bring the price of a robotaxi ride down to say $1.50 a mile, which is substantially less than Uber. You're going to have a lot more demand for robotaxi rides than you probably have vehicles to match. So it's going to take a while before Tesla has enough robotaxis on the road to satisfy demand. So in the first few years of the robotaxi network, robotaxis are going to make insane profits. And I question whether the market will ever catch up or how long it's going to take. But certainly by 2030, there's a chance that the market hasn't caught up and the individual robotaxis are still making insane profits. Got a video coming with the napkin math for robotaxis, but you can easily, if you can get to $50,000 a share on the napkin math for batteries, that doesn't include robotaxi, and then you throw the robotaxi network in, and you say 100 million robotaxis making $25,000 a year in profit, you end up with insane numbers. The numbers just go crazy, and then you get to bot. It's almost impossible to put a number on bot, but it's huge. And I'm going to do that napkin math video soon. So all in all, Q1 was great. We had great numbers. We would have liked to have seen more increase in vehicle delivery. Shanghai had a shutdown. There are other supply chain issues that are holding up production. Tesla seems to have a handle on it. Berlin and Giga Texas are going to ramp. I think they've worked out their supply chain issues enough to see significant growth this year. And like I said, I think we may see 500,000 vehicles delivered in Q4. We're going to see earnings per share in Q4, maybe $6 a share, maybe even higher. Somebody I was talking to might even be $7 or $8 a share in Q4. Those numbers translate to earnings per share expectations for 2023 being much higher, and that translates to a higher share price if you get any reasonable price earnings multiple. So let's get excited about Tesla going forward for the rest of 2022 and into 2023. And if you're thinking long term and you're thinking robotaxi network and bot, you see Tesla's going to the moon. Tesla stock is going to go to $50,000 a share, $100,000 a share. Who knows where it could go? If you have $100,000 in Tesla stock now and you think the stock's going to next, you are a future Teslanaire and you should buy the Teslanaire t-shirt at elonbits.com. Please support this channel on the Locals platform or on Patreon or as a YouTube channel member. Links to all that in the description below. Check out my other videos and thank you so much for watching.